Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the best dividend stocks going ex-dividend January 14th through the 18th, 2019. So we have 5 stocks for you guys. We have ticker symbol ABBV within the healthcare sector. This is AbbVie Inc. We have ticker symbol AFG. This is within the financial sector, and this is the American Financial Group. We have ticker symbol MGRC within the services group, and this is McGrath Rent Corp, not specifically a REIT. This is a services specific sector. We have ticker symbol OXM within the consumer goods. This is Oxford Industries, and we have ticker symbol RPM. This is the inside the industrial goods sector, and this is RPM International. So those are the 5 stocks we're going to be covering in today's video. If you are brand new to the channel, hit that subscribe button below. If you do find this video helpful in any way, useful, hit that thumbs up button below. And of course, if you have any comments, questions going over the video, stock market, personal finance, real estate, let me know in the comment section below. I will always read and reply to your guys' comments, and let's go ahead and get into the video. So all of these stocks plus an additional amount were screened for today's video. Now, I posted a list of additional stocks here on my Facebook page, but these are the top 5. So all of these went through the whole screening process. They all had starting yields greater than 1.5. They've all had rising revenue, net income, free cash flow in the positive direction here over the last 5 and 10 years. Their next year earnings per share is expected to be greater than the current earnings per share, meaning that going into 2019 and beyond, they are expected to be growing and showing more growth as far as their earnings go. These have all grown their dividend positively or for 5 or more years. Some of them, AbbVie, for example, has only grown their dividend since 2013 for the past 5-6 years now, but they are split off of Abbott, which does have about 44 years of growth, and then there's another one in there, I believe, that's right around that 40-year mark as well. So all of the information here that we're going to be covering in today's video is the ex-dividend dates, the dividend dates, the price comparison to the yield, PE comparison to the industry and the S&P 500, payout ratio, and a few other items there. So if you haven't got started in your investment journey, I do have some affiliate links here within these. You guys can check out this specific page here in the description below and also in the comment section. I also have links to all different ways that you can get started in your investment journey. And of course, you do get free shares from Robinhood and Webull. I've created 2 free applications for kind of keeping track of how many dividends you'd receive throughout a period, or what your new equity would be after a certain amount of period, 5-10 years, and also created a simple retirement calculator to calculate your own retirement numbers that you would need to invest in order to kind of meet your goals. You punch in your age, your retirement income, how many years you want to retire for, and it's going to spit you out sort of a plan kind of going forward. Now, all of these stocks were ordered by ex-dividends January 14th to the 18th, 2019. So these are not given a specific integer as far as this is the best one here. This all it represents is that it's going ex-dividend first. So starting at the first one here, number 1, we have ticker symbol AFG. This is the American Financial Group. They provide property and casualty insurance products within the United States, from vehicle, commercial, and many other types of insurance. So it's very similar to Aflac. This, of course, falls within the financial sector. They're going ex-dividend next Monday, on the 14th of January 2019. You'd have to buy this one on Friday this week or prior to be eligible for that ex-dividend. Plus, then you get paid out that payout on the 25th of January this month. Now here, I like to show their 10-year graph here, taking your 10-year graph change for the year divided by 10, and that's going to get your average difference per year. So here, for example, price is up 273.8% over the past 10 years, or 27.3%. Just take the number here, divide it by 10, that's going to give you your average. So here, net income 223.9, or roughly 22.3 for their net income. In the red, free cash flow up 112%, or roughly 11.2% on average per year. And their revenue up 69.15% over the last 10 years, or roughly 6.9%, which is still 7% revenue growth per year. Are very strong financials here. Insurance is always one of those things everyone has to have, for your vehicle, for yourself, for your family and stuff. So very good looking financials there. Now, moving down here, we I like to display their 1 year information. So here I included a new item, their earnings per share, their future earnings per share to 2019. So here, this can be used to kind of get a better estimate of their forward PE, which is here included as well. So their forward earnings per share is $8.63. They're currently priced at $89.64, and they only pay out 40 cents per share each quarter. So if you multiply 40 cents by 4, that's going to get $1.60 per share. That puts it well below their earnings per share with a payout of 18.8%. So they can continue to raise this dividend at very nice increases. They also have special payouts here at different times in the year. Now, they do currently have a dividend yield sitting around 1.78 to 1.62, depending on the day. You can see that this one has had a very quick fall here, going in the period of December. It has been on a downwards trend, but there has been a bit of a bump here prior, probably on December 26th when all the other stocks started to rally. This one probably rallied along with it. Now their forward PE is at 10.39. If you guys want to get your calculators out, you guys are able to do this as well just by taking the current price of $89.64 and dividing it by their forward earnings per share of $8.63, and that's going to get you your 10.39%, which is just their forward PE. Now, when charted, it does show the current stock does have a current price under the yield, which may indicate it could be undervalued at this time. The stock is trading below the industry average of 12. Again, forward PE right around 10.39, which that puts it underneath the industry average and the S&P 500 average of 19.55. It does have a has a below 60% payout ratio at 18.8%, which is very healthy. Dividend growth for the past 13 years since 2006. Its price to book value 1.54. Its price to sales at 1.11, which are both under 3.0, where those assets, sales and services based companies would be considered a deal. So very strong financials, very strong dividend growth, very good payout ratio. Over the past 10 years, their dividend has increased roughly 20.7% on average per year, or I believe it was 207% there over the last 10 years since 2008, since I did that 10-year period there. So that was ticker symbol AFG. Number 2, we have ticker symbol AbbVie. This is ABBV. So AbbVie is a pharmaceutical company here. They make many different products. Their product line include treatments for health conditions such as rheumatoid arthritis, arthritis, Crohn's disease, HIV, low testosterone, and many others. Their sector, of course, falls within the healthcare. I am, quick disclosure, I am a long-term holder of AbbVie. I've held it for at least the last year, if not almost 2 years now, so quite a long while here, and continuing to average into and buy more. So kind of moving on from that, ex-dividend is going ex-dividend next Monday, the 14th of January. You'd have to again buy this one on Friday or prior to be eligible for that payout on the 15th of February. Now, taking a look at their 10-year graph here, this one's showing price here in the blue. Again, all the numbers are the same. So price up 157% over the past 10 years, or roughly 15.7% on average per year. And the red, free cash flow up 98 or 9.8% on average per year. And the orange, revenue up 75.12 or around 7.5% on average. And their net income up 43% or roughly 4.3% on average per year. Now moving down to their 1-year graph, AbbVie currently has an earnings per share of $9.61. They pay out $1.07 per share each quarter, which puts their yearly payout at $4.28. So they do have a payout ratio of 54.5%. So it still falls below that 60% payout ratio I like to look for stocks in. Now they are slightly trading below their 200-day moving average of at $93.57. That's their 200-day moving average. They're currently trading at $90 currently. That puts them with a dividend yield, because they just recently increased it here going just recently, that puts them at a current dividend yield right around 4.74. Now the price to book is high here at 41.38, but this is a sales driven company. So if you do look at the sales number here, price of sales, it is at a 4.39, and their forward PE is at a 10.28. You can see here that their earnings per share for 2019 has jumped here by quite a bit, probably 8.7 in that range to now 9.6. So when charted, it does show the current stock does have a price under the yield, which may indicate it could be undervalued at this time. The stock is trading below the industry average of 27.5 and below the S&P 500 PE average of 19.55. And again, sitting below 60% payout ratio at a 54.5 dividend growth for the past 46 years from Abbott. It is a split off from Abbott. They split off their pharmaceuticals. So AbbVie on its own has been paying out and growing dividends since 2013, which puts that right around 5, now 6 years of dividend growth. Again, price to book value is high. It's above 3.0, where asset-based companies would be considered a deal. But again, price of sales here for AbbVie is 4.39, which is still above 3.0, but it is for those sales and services-based companies. So stock, again, forward PE 10.28, industry of 27.5, S&P 19.55. All the information here. They've grown their dividend roughly 16.75% over the last 10 years, and Abbott, which is their split off here, has grown and paid out dividends since 1973, and AbbVie probably will continue in that path as well. That was ticker symbol ABVV. That was AbbVie as number 2. Moving down to number 3, we have ticker symbol RPM. RPM International owns subsidiaries that are the world leaders in specialty coating and sealing, serving both industrial and consumer markets. RPM Industrial's products include roofing systems, sealants, corrosion control coating, flooring coating, and specialty chemicals. Their sector falls within industrial, goes right along there with Triple M and Honeywell. Now their ex-dividend is on Tuesday, the 15th of January, so you have to buy this one on Monday or prior, and then you'd be eligible for that payout on the 31st of January. Now this one, price up 277% over the past 10 years. You can see a huge run up here sometime here in 2018 before coming back down at just as quick as it came up. It had fell, so it is at an average increase over the past 10 years, up 27.7%. In the green, net income up 143, or roughly 14.3. In the red, free cash flow up 121, or 12.1. And in the orange, revenue up 51%, or roughly 5.1% on average per year. So very strong there. Besides the revenue, everything else up is in double digits. Sliding down to their 1-year graph here. This one does currently have an earnings per share there of 3.51. This one has been waving here. They have recently increased it, but they've been kind of moving it down slightly. So they are expected to continue to raise it here, but they may have just kind of lowered it here for their forward. Now, this one does pay out 35 cents per quarter. If you multiply 35 by 35, by 4, that's $1.40. So that's going to give you $1.40 per share. Their earnings per share is about $3.50. That puts them at around a payout ratio of 45.2%. Their 200-day moving average is at 58.12, and they're currently priced at $52.81. Giving them a dividend yield of 2.65% currently. Their forward PE is a bit high still here at 20.66%, so it is above the industry average for them of 18.7 and the S&P 500 average of 19.55. So when charted, it does show the current stock does have a price under the yield, which may indicate it could be undervalued at this time. The stock is trading above the industry average and over the S&P 500 average. It is sitting below 60% payout ratio at 45.2, and it's had dividend growth for 44 years since 1975. Their price to book is 4.36, which is above 3.0, where asset-based companies would be considered a deal. But again, this is a sales and service-based company, so their price of sales is 1.32, which is below that 3.0 value, where sales and services-based companies would be considered a deal. So dividend yield 2.65, $1.40 per share each year. Payout ratio 45.2, 44 years of solid dividend growth. Over the past 10 years, they've increased their dividend by roughly 7.5%, which is a very healthy dividend increase. I like to see dividend increases between 5 or 7 or even higher if I can get them. But they've had really nice solid dividend increase there since 1975. Sliding down, that was number 3. That was ticker symbol RPM. Next, number 4, we have ticker symbol MGRC. This is the McGrath Rent Corp. They engage in the rental and sales of relocation relocatable modular buildings and electronic test equipment, primarily in the United States. It operates in 3 segments: Mobile Modular, TRS Rental Co., and Enviroplex, McGrath's Rent Corp. So they're all a bunch of subsidiaries of the main company here. Their sector falls within the services. Their ex-dividend date is on Wednesday, the 16th of January. You would have to buy this stock on Tuesday or prior, hold it until Wednesday, and then you'd receive that payout on the 31st of January, 2019. So here, over the 10 years, in the red, their free cash flow is up 393%. You can see the swings wild, probably picking up different equipment there, subsidiaries, huge portions there. So roughly 39.3% on average per year, but those can swing very quick and wild. In the green, net income at 345% or 34.5% on average. And the blue, price is up 113% or roughly 11.3% on average per year. And in the orange, revenue up 59% or roughly 5.9% on average per year. Their free cash flow makes everything else look, a little bit smaller because of the swings here that it does take. Now moving down to their 1 year period here, let's go ahead and slide down. They're currently have an earnings per share of $3.21. They've been growing it very nice and steady. They do pay out 34 cents per share each quarter. Multiply 34 by 4, and you're going to get $1.36. Their 200-day moving average at $56.91, and they are trading at $50.20. That puts them with a dividend yield right around 2.71%. Now, if you look at their forward PE, it's around 15.64, which is below the S&P 500, but not quite below their industry average there for these services, or within their industries, not the sector. Now, their price to book is 2.18, and their price to sales is 2.52. So when charted, it does show the current stock does have a price under the yield, which may indicate it could be undervalued at this time. The stock is trading above the industry average and below the S&P 500 PE average. It is sitting below 60% payout ratio. It's got a 49.8% payout ratio and has grown and paid out a dividend for the past 17 years since 2002. Their price to book at 2.18, price to sales at 2.52, which are both below 3.0. For those asset sales and service-based companies would be considered a deal. So that was our number 4. That was ticker symbol MGRC. Now, last and our final stock, we have ticker symbol OXM. This is the Oxford Industries. It's a producer and marketer of branded and private label apparel for men, women, and children. Oxford provides retailers and consumers with a wide variety of apparel products and services to suit their individual needs. I believe Dockers is one of their brand, or the products, and they have a number of other products out there, but I know Dockers, the shoes and pants and such, I know they're made by OXM. Now, their sector here falls within the consumer goods. Their ex-dividend date is next Thursday, the 17th of January. You'd have to buy this stock on Wednesday or prior, and then you would receive that payout on the 1st of February 2019. Now, taking a look here at their 10-year graph, you can see price up 434%. Has some very big swings here. 2014 dipped, dropping. I'm not sure how much that percentage there is. Looks like maybe a good chunk there, 20-30%, before coming back up, dropping back down, coming back up. So this would be a cynical consumer goods. It has its little ups and downs. So 43.4% is their price change on average over the last 10 years. In the green, net income at 404%. It's a very strong net income in a nice upwards direction. In the orange, revenue at 46% or 4.6%. And in the red, free cash flow up 26% or roughly 2.6% for their free cash flow. Moving down to their 1 year graph here, they are currently, their earnings per share is 4.79. They're currently paying out 34 cents per share each quarter, which gives them an annualized payout there of $1.36 per share. Their 200-day moving average is $83.77, and they're currently priced at $74.53. That gives them a forward PE of roughly 17.37. Their current yield is around 1.82 to 1.73, just depending on the day, what the price fluctuates here. Price have been crazy here. It has started bouncing higher as of December 26. Now the price to book here of 2.71 and price to sales 1.13. So when charted, it does show the current stock does have a price under the yield, which may indicate it could be undervalued at this time. Stock is trading below the industry average of 27 and below the S&P 500 average of 19.55. The payout here is at a solid 29.6, which is way below 60% payout ratio, and has had dividend growth for the past 9 years since 2010. Their price to book, again, 2.71, and their price to sales at 1.13, which are both below 3.0, where those asset, sales, and service-based companies would be considered ideal. This would fall within the sales area because they do have many different products that's sales based. So dividend yield 1.82, $1.36 per share each year, very low payout ratio, right around 30, and 9 years of dividend growth at an average rate of 8.88% over the past 10 years. So that is it for this video. If you guys did enjoy the video, find it helpful, hit that thumbs up button below. If you are brand new to the channel, hit that subscribe. If you have any comments, questions, you want to let me know, what would you pick? If you could pick any one of these 5 stocks in here, would you pick, let's go back up to the top here. Would you pick AbbVie within the healthcare sector, the American Financial Group here within the financial sector, the McGrath RentCorp within the services sector? We have Oxford Industries within the consumer goods, or RPM International within the industrial goods. Let me know in the comment section below which one of these 5 stocks would you guys pick. I myself am only invested in one, which is AbbVie. I don't plan on buying any of the additional ones, but it's still good to do fun. It's still fun to do research and look for other companies out there for screening. So that is it, you guys. Thank you all for tuning in. I will see you next time. Have a great day. Bye.